Hello, everyone. This is Sergio Marrero, and tonight we are here with another session of RBL1 Live. We have Kimmy Paluch, who is managing partner of Beta Boom. Thanks for joining us tonight.
Thanks for having me. Excited to have this conversation.
Yeah, I'm excited to hear about Beta Boom and your story. For the audience that may not know, Kimmy is a graduate of MIT. She went there for her MBA, the Sloan Business School. She was a graduate of Dartmouth College. I learned originally from Jamaica and a little bit of a nomad, which is great. And now is managing partner and has been for the last several years of Beta Boom. So I'll turn it over to you, Kimmy, if you can share with the audience, what is Beta Boom?
Sure. Thanks, Sergio. So Beta Boom is a pre-seed fund. We invest in software startups. We have a specific focus on companies that are serving the rising majority. And what I mean by that is funds are companies that are actually developing innovations that are for typically overlooked groups, and then as a result are often run by founders who are also from underrepresented groups, so mostly women and founders of color.
Amazing. And if you can share a little bit, I know you shared a moment ago about your model, what it was, what it is now, a little bit more of the cohort, but how much do you guys invest, and what you said the pre-seed stage? Are you looking for a team in a dream, or they come with you with a product in post traction? Like what is the fit for Beta Boom?
Yeah, team and dream is a requirement. We are actually usually post products and post revenue. The revenue where we wiggle on, if there's users, then we love that. We do like to see some traction. I think the thing that's really different about Beta Boom, I mentioned like the demographic that we serve and what we look for. A lot of what we wanted to do was really challenge whether capital alone is enough. We believe that, when we make an investment, really what's more transformative is the social and human capital that we bring to the table. And so we make our investments, and then we work with our founders for up to 6 months. And what we do is we surround them with a team of coaches and operational experts that work alongside our teams. And the intention is to really increase the likelihood of success. And by actually having people work alongside our founders, we're finding the ability for them to create their internal capacity. And that is more transformative than capital alone. I think a lot of funds that have targeted the groups that we work with, they're taking a model that has existed from the 1950s and expecting the same outcomes. And really, we want to challenge, like, what should a modern venture fund look like to actually increase the potential for success for the founders that we serve. You asked about check size. So we're at 150K to 350K are typical investments. And yes, to your point before, I do believe in the power of community, both for the businesses and what they're creating. I think a lot of us are looking at what really is going to make companies stand out, and community is a big piece. So our investments previous to this have been in cohorts. We are now looking at making them throughout the year, but we are still trying to build that community among our portfolio companies. So given that we're working so intensively with them, we bring a lot to the table, but our founders also bring a lot. And so there's definitely ability for them to interact and help each other.
Amazing. Is there any particular industries or geographies of focus?
Yeah, so he's teeing me up here. We focus primarily outside of the Bay Area. I spent all my career in the Bay Area, and I love it. But I did get, I think what pushed me in this direction was just being a bit disenfranchised or disillusioned with what gets funded. I think there's a ton of innovation that's been overlooked because of geography, because of who's running the companies. And so we are specifically looking in rising tech cities. Our locations right now are Salt Lake City, Chicago, and the Long Beach area. But we're always looking for incredible companies that are not being given the same opportunities just because of they're not in the hubs that are typically looked at for investment. In terms of what we like, I've come from an impact space, so I love when there's an impact component to businesses. But we are general software. I think a lot of the founders, especially at this stage, they share the same problems. The areas that we really lean into are digital health. It's about a third of our portfolio at this point, fintech, consumer internet, and SaaS businesses. But really, we are opportunistic across all software.
Excellent. And how did you come up with the name?
Good one. It's actually a funny thing where my first business, I was in the product innovation space. So I was working with a lot of startups and corporations. And I probably went through about 4 name changes with that business. Our last name for that one was Boom Factor. And what we were doing at that point was we were basically a startup for hire. We would put cells of basically startup pods that would go in and help basically build new innovations. So the Boom name came from that. Really, the point was to take something at its infancy, at its beta phase, and essentially allow it to explode. So that's where Beta Boom came from.
Love it. Love it. Well, before I want to learn a little bit about you and your story. How did you go from, I know you previously shared about Boom Factor and your history of working in product design. Can you share more about that? Like what, did you always know you wanted to be an investor or can you walk us through your journey? What inspired you to go from product design to now starting and leading a fund?
Yeah, no, non-traditional path for sure. I actually, growing up, I thought I was going to be an actuary. That was what was going to be some statistician. I loved math. And then I found computers right around high school. I shared with Sergio, I had moved from Jamaica to Connecticut, and I actually took my first coding class probably there. Actually, I did do something in Jamaica, but it was like on floppy disks, like anyway, I'm dating myself. But yeah, so I studied computer science undergrad. And so my original dream was actually to be an engineer. And so after I graduated, I moved out to the Bay Area with my CS degree. I'm like going to be an engineer. It was a little challenging at that time for me to get a position. And I think retrospectively, I looked back at that time and said, was it all fair game, or was there something that I was fighting against? And I think that's inspired this new journey of my own, just recognizing the uphill battle that I had faced then. But I charted my own path in tech. I basically started straight into management. So I was a project manager at first in a web development firm. And worked there for about a year before I was like, I think I can do this on my own. So my husband and partner in business, we started our first business. Basically, I was about 2 years out of school, and then started doing user experience design, which was all the rage at the time. So I actually came at this a very different angle. I did not ever think I was going to be on the investor side. I don't think I knew what venture capital was, like even going through college. But yeah, I was doing a lot of innovation, and I loved that part. I love the infancy of actually working through, like, what do the users need? What does the market need? Where's the opportunity? How can you differentiate? So I spent most of my time doing that. And what I realized is I was basically helping teams to develop their own products and get them to market and grow them. So I did several startups, one on the side, then one permanently. I did one in the edtech space, which was fun.
Edtech's tough.
Edtech is tough. And then I even did a startup with toys for a little bit. But what came back around was, I think I'd started doing a lot more fintech consulting, and it was for a lot of big banks. And at that time, I started to really look at, I started another startup at the time. It was for a marketplace for selling used products in trusted networks. But I started to look at the numbers in investment, and I've started to see like just how abysmal they all were. I think we all know just the terrible numbers. It's less than 1% that goes to Black founders, less than 1% that goes to Latinx founders, female founders. If it's a full team, it's 2.3%, maybe 14% if you have mixed. Anyway, the numbers are terrible and they don't match the demographics. So I began to ask myself, like, I was looking back at my experience and saying there's problems in tech, there's problems in investment. And I decided that if I really wanted to make a change, I should be going on the other side of the table. There's so much that you can do as a founder and so much more you can do as an investor. So that really was the nexus. I made a very conscious decision of, I'm going to jump at this new problem that I really want to be a part of fixing. So it wasn't easy, and I can talk about some of those things. The first thing was, like, I had kids at the time. I was in the Bay Area. I had a house and a mortgage. I was like, how the heck am I going to just start my career over? So I actually started as a VC fellow first for a different fund and kind of learned the ropes a little bit. And then really, I just said, you know, this is still not solving the problem that I want to. And so I kind of just made a jump for it and sold everything in the Bay Area, closed down our business, and then moved to Salt Lake City to get started on this journey.
So let's go back to that. So you were, when did you decide to shift more into investing? Was that when you were pregnant, or right before? Like when? Can you talk like timing on, like what was the pivot point to go, I'm gonna focus more on investing?
Yeah, it took a little while. I think when I started looking at this space was probably around 2015, when I was really just starting to pay attention to the dollars and to what was getting funded. I remember when Juicera happened, that was kind of like the big tipping point of something has to be done. Why are these kinds of ideas getting funded? And we have other people saving the world in other parts and they're not getting funded. But yeah, no, I had my kids, actually my first kid when I was in business school still. So I had been consulting for another, I want to say about 5 years. Then in 2015 was when I started paying attention. 2017 was when I started working with the fund. And then we moved in 2018. So again, a pretty fast shift. Like I think I started working with the fund in 2017. And then first part of 2018, I remember it was MLK weekend. We packed up the dog and our kids and drove down to Salt Lake City just to check it out because we'd heard about Silicon Slopes. And we realized there was a big opportunity, not just in that region, but in so many other regions. And so by June of that year, we made our first investments.
Amazing. So you just got up, pack your bags, went to what? That's amazing.
It sounds crazy, but yeah, it was pretty fast. We knew what we wanted to do and we knew that we could do it.
That's and what inspired particularly Silicon Slopes? Why not LA? Why not Seattle? Why not Phoenix? Like what drew you to Utah?
Yeah, several things. I think on that visit, when we were just driving down the main corridor, we just felt palpable what was happening in this region. And if you look at the performance that it had between 2017 and 2018, it was one of the top performing ecosystems just by virtue of its exits. It is a very entrepreneurial society here. And at the same time, it's not necessarily the most inclusive or representative when you look at the founders that are, funded. And particularly, I think what was really intriguing about this region is female founders. There's a ton of female founder activity here, and yet you don't see them represented in the funding landscape. And so the dichotomy of those two things really struck me as this is a potential place that could see a lot of improvement. But yeah, I think, we wanted to be somewhat center of the country. Again, we did want to focus on outside of the Bay Area. So geographically, it was good for us to at least have access to places like Texas and Chicago, but then still have access. I think one of the key things that's very interesting, if you're working in this space as an investor, is also being a bridge. And because we had built our careers in the Bay Area, it's not just about the local resources, it's actually being able to have access to, the coastal talent. And that's a key thing, from advisors to experts that can help you grow your business to the capital side.
Amazing. I know you also lead the fund with another partner, another Sergio. I don't meet many, so it's great. That's great. So what can you talk a little bit about what led you to start together?
Yeah. So as I mentioned, we had our first business together. Sergio's story is extremely interesting as well. He was an immigrant as well. He came from Poland through asylum as he escaped communism. And so he started out in the Chelsea region, in a very poor region. And so for him, the inspiration coming here is actually any underdog. Because he lived in a place that was very impoverished. It was actually, Chelsea was like the war crime capital at the time. And so for him, he saw just incredible talent around him that didn't necessarily get the right opportunities. So his story started long before mine, in terms of he was very determined about doing something about creating opportunities for people that are usually locked out of them. So it was actually a very easy decision for us. I remember, we were building our company, and we were looking at what could we be doing to kind of change the investment landscape. And it was pretty clear to us that we couldn't do it sitting in Oakland, sitting in the bubble. And so the conversation was actually, I think I probably took the longest time to come around with, like, we're really going to jump to this. But for Sergio, yeah, he had an incredible ability already. He was working in a tech company, his own startup. They'd raised some funding, and he was mentoring other founders. And so it was a natural transition for us to make this leap.
Great. And I know, and can you talk a little bit about the dynamics of starting a fund with your partner? Like what were there any challenges? How did you make it work? What made you guys say yes? Or you just were like, all right, let's do it? What was a little bit of the story there?
I tell people, like, if you look at team, we always say we invest in teams, and especially at the earliest stages. I think that we're one of the best teams to invest in, because we've been working together for about 16 years. So that piece of it wasn't that hard. I think it was taking the leap, because it did require the lifestyle change. It did require us, like, completely moving our kids. And it was a crazy time. Like I said, the timeline was really fast. So we made the decision in February. I think we opened our applications like right around that weekend that we were here. And then we had to, like, pack everything up in about 3-4 months, make our selections, get our kids in school, and start the fund. So I think more than anything, that part was, like, super crazy, but there's nobody else I would have wanted to go through that with. I think, we balanced each other a little bit, because I think Sergio is a lot of the visionary. And I think about this a lot with founding teams. It's like, you do want to bring different perspectives. And then I'm very much of a detail oriented, in the weeds kind of person. And so we tend to challenge ourselves and make that piece work. But yeah, the division of labor has been pretty seamless. Like, he's been guiding a lot of the development of the founders, because that's his bread and butter, and he's really good about that. And then I've been more on the fundraising side.
Awesome. And so what are some of the, for those other partners out there that are starting either a startup or a fund together, what are some what are tips, advice you have to make it work?
For us, it was less important because we have already the marriage contract in place. But I always tell people, don't skip that step. Like, talk through, like, what your responsibilities are, and make sure you get things in writing, because it is probably the hardest thing to do, and it's the hardest partnership. And so making sure that you're clear about what the roles are it's just so important. And then I think that very trite saying, but hire better than yourself, is true. Like, you should be looking for a partner that pushes you, that you wish that you were better at with something that they do, because that is ultimately going to make you both better. Like, don't ever settle, especially for something so important. I don't know, there's many more things I could say about this. I think that dynamic is really important. And I think also listen to your gut. I think sometimes founders wait too long. When things do go wrong and it's, like, clear that you guys are moving in different paths, try and do that quickly and cleanly, because it drags you down and it drags the business down. It's a really hard thing to navigate, but sometimes it's better to kind of pull the Band-Aid off and just really be honest with yourself about whether it's the right partnership. And then I'll always say, like, wherever you can test somebody out before you make it all formal is probably a good thing. I guess Sergio and I got to test ourselves out for about 14 years before we did this second venture. But, there's a reason that when investors look at teams, they want to see a long track record of working together, or because this is the hardest thing you can do, and the highs and the lows, and knowing that team will stick together no matter what and find a way to get through all of the hurdles that are going to show up. Super important.
Amazing. I know, looking at your focus outside of Silicon Valley, you mentioned getting out of the bubble, you're focusing on underrepresented founders also outside of those ecosystems. Can you share a little bit more on targeting founders? Like, how do they, how are you hearing about them? How are they finding you? For a lot of these funds that are, I guess, waking up, or at least taking stock of trying to be more equitable in their investments, and just improve their deal flow. What are some of the things you all do to create robust pipelines outside of the coast?
Yeah, great question. And I think, when I think of ourselves as a startup VC. Like, this is not, we're fairly young. We're definitely doing a lot of different things to move quickly, move fast, and evolve. So at the beginning, it was really scrappy. Like, when we started the first application process, it was a little bit boots on the ground. Like, when we were thinking about the Utah market, we were actually going to different groups. We had flyers. We actually went around and actually tried to recruit founders. Beyond that, since then, it's been a bit more sophisticated, and I think it's more about partnership. And I fully believe that as much as you can do alone, you can do so much together. So we've been working with, I'll take Chicago, for example. We have somebody on the ground there now, but we tend to talk to and work with different organizations that are already working with the founders that we work with. That was our first way of getting the word out. The thing that I say, we had the benefit that we built this the right way from the ground up. So we didn't have the baggage that some funds have in terms of having to correct for things that they've built and systems that they've built. The way that I think that things can be equitable is to look across your full investment cycle. So from deal sourcing to how you're evaluating deals to how you support the founders after. So in terms of actually reaching new founders, for those that are established and haven't made those investments, it requires work. It requires work. Like, when we think about hiring people, what do? We go to schools, we go to different competitors, we go to where the people are, and that's no different for an investor. So if I want to serve more founders who are from underrepresented groups, going to organizations they're already working with, going to the places where the business centers that they may already doing, going to the schools that they go to, it requires you actually reaching out and saying, hey, I'm here, and not just expecting people to show up at your door. And so that's what we did at the very beginning, is we made sure to talk to the right people, network into the right people, and say, hey, we're here. Since then, we've shown a track record of investing in these companies, so we're getting a lot more inbound. And we're getting inbound also from later stage investors, which we've also collaborated with. And I think that's the important thing. We always talk about investors and VCs, all about relationship building. Looking at your relationships and making sure they're as diverse as the portfolio you want to represent is the first thing to do.
And no, that's great. I'm glad you mentioned some of the organizations. I know in your website you talk about P33 and Get Cities as your some of your partnerships there. So that is great organizations for those that know. If you're aspiring founders in the Chicago ecosystem, check them out. Also, I want to take a step looking at the broader ecosystem. You guys are doing a great deal. What more do you think at a kind of systems level, needs to be done to really shift the needle, for underrepresented founders? Like, what do you feel needs to change? There's, them coming to you and getting investment and support, but there's also a limit to you know, the amount of capital and number of founders you can you know invest in, what are some systemic things that you think need to change to really level the playing field for women and people of color, especially the founder community?
I'm sure you have a lot of ideas on this too. I think it's endless. There's just so many. If we look at the system, it is broken. There's a reason that the numbers are stuck where they're stuck. Is because the system is broken. And I do think we need big capital to also be doing something in this region. So if you look at our fund, we're a $20 million fund. That's a drop in the bucket with all of the available capital that's out there. And so we need everyone to be looking at how can they be doing better and how can they be channeling capital to founders. From our side, we're looking at this, like I intentionally wanted to start at the early stage, not only because I like it, but I think it has huge ramifications when we look at what ecosystems can look like later. How many founders are going to be ready for a seed and a Series A? But even at our stage, we're seeing major gaps upstream. So, you know, we talk about this friends and family round, and the friends and family round is easy for people who have come from means, and that's not always the case for the founders that we serve. So I think a lot of, and we're doing this in 2 of the markets that we're in now, is we need non-dilutive capital, meaning capital that is not going to take equity early on. If we can provide that capital, a lot of businesses could still exist and still be ready for our pre-seed stage and a seed stage. But we need that ecosystem to work. And as I mentioned, I don't believe in just capital. Money alone is not enough. We also need resources. So, and it's a type of resources that we need. I think that mentorship goes so far, but where we've seen real transformation is actually in the coaching element, because not every mentor is going to have an answer for you. They don't come in with a magic wand and say, do this and it fix your business. So I think this whole, you know, pairing people with or founders with mentors who are somehow going to tell them what to do, is that mentality needs to be broken. What really needs to happen is somebody who guides you and can ask the right question and listen to the right things, because they don't have the answer. So for me, when I think about the things that could be done, especially for the regions that we look at and the founders we look for, more non-dilutive capital, more access to potential advisors, mentors, customers even, because that can also be a friction point, and getting them to the next phase. From the investment community, like I said, there's a reason that some of these numbers aren't moving. Sorry. The numbers aren't moving because, like I said, there's a biased system that's being run in. So I think people are thinking they can solve things with the top of the funnel and say, I just need to get to more founders. But how many of them are going to get past your investment committees? How many of them are going to get past your scorecards? Because bias has been ingrained into scorecards. Investment scorecards have been designed to give more points, for instance, to pedigree, to coming from certain schools and things like that. Those schools also have their bias. There's a reason that there's underrepresentation in like the top schools as well. So all of that needs to be redone. And then we really need to tie these networks together. So one of the things we've done on the grant piece is, if you look at solving these problems, a lot of people are working in silos. If we can connect dots more and have more people sharing what they're learning, I think we can solve these problems faster. But oftentimes we're working on these problems alone. And I think partnership could really move the needle.
Excellent. I know we're just about time. If you can share with the audience what's next for Beta Boom.
Yeah. So we are, I'm in my raise now. We're hopeful that this is going to be able to start allocating this year. So we will be opening up applications again. We actually keep them open in general, and we will start making allocations again. On the grant side, we have already launched in Utah, as I mentioned, and we're currently working with P33 and Get Cities, as Sergio mentioned, and many other community partners there, Matter being one, and M-Hub. There's some great people that we don't know that exist. We need to connect the dots to the founders. So we're also actively doing applications there. And one final thing, we partnered with Next Wave Capital for the Founders of Color Showcase that's happening on the 5th. And we're excited about that one too. It's very catalytic in terms of getting more capital to underrepresented founders.
Excellent. So thank you, Kimmy, for the work that you're doing for everyone watching. This is Rebel One Live. Kimmy Paluch, managing partner of Beta Boom. Thanks for joining us, Kimmy. And you can find the link to Beta Boom in the live stream notes. Thanks again for joining us, and good night.
Nice. Thank you.